control. These are also very important in almost every syllabus. They include these chapters: standard costing, marginal costing, and budgetary control. Okay, this is very important. Is that clear? Now let's just move on to the scope of management accounting. Now see here, we have scope of management accounting. It's really simple. What do you mean by scope of management accounting? Scope means the area that is covered by management accounting. Okay, what all areas are there which are touched by management accounting? So see, you have to understand in management accounting what happens. In management accounting, you all know we provide relevant information. So this relevant information can be quantitative in monetary terms, or it can also be qualitative, which is non-monetary terms. Okay, it can be in both the forms. So this information has to be gathered first, right? It has to be collected from various sources. So this can also be referred as scope of management accounting, because we know what do? We collect the information from various different sources. So those sources are, see here, financial accounting, cost accounting, tax accounting, human resource accounting, management information system, yes, and then see a budgeting and forecasting. We are not taking any information from anywhere. We are doing the budgets. We are forecasting the informations by using the tools and techniques, right? And then financial analysis can be done. We can take the financial statement and can analyze that. And then there can also be other areas which are touched by management accounting, such as internal audit, okay, and then other methods and procedures. Fine. So all that can also come under scope of management accounting. And then internet and print media, yeah, we can also take information from outside. Okay, so this is the scope of management accounting. Now we also have to understand the functions or role of management accounting. What we have to do, we have already discussed this. Collection of data. First we collect the data, then we transcribe the collected data, we write somewhere properly. Yeah, if we have in any other format, we convert everything and we write in simple terms, and then we analyze the data with appropriate techniques, which we have discussed. So many different types of tools and techniques are there. And then what do? We interpret the data. Whatever result has come after making the analysis, that result we have to interpret. Yeah, we have to come to a conclusion. Okay, this means this. Okay, let's just say, for example, you have calculated 20 ratios. So from that 20 ratios, you have to, make a conclusion. You have to connect the various ratios under ratio analysis, and you have to come to a conclusion. Okay, this is the analysis of the business. Okay, this. You have to connect the dots. Okay, and then you have to make a report, isn't it? After interpretation. So in that report, you have to write in brief and to the point what is the analysis. Okay. And then you have to communicate, you have to share the report with the management so that they can take the decisions, isn't it? Yes. So this is the role of management accounting, and believe me, you'll be paid a lot if you are a management accountant. Okay, mostly CFAs and all, they get paid a lot, right? Financial analyst, you can search on Google, they are paid very highly. Fine. Now let's just move on to the functions of management accounting. Now see here, we have functions of management accounting. It's really simple. The first one is planning and forecasting. Planning means deciding in advance what has to be done. Forecasting means looking into the future and estimating what can happen, right? So forecasting we will do by making budgets, right? We will do sales forecast. Yeah, we'll prepare cash budgets. And planning means, see, we will help the top management in setting up the policies, yeah, framing the policies, setting the goals of the organization, isn't it? And then alternative courses of action that the management might have to take regarding the forecast. So all those things we are going to do. And then the second thing is modification of data. See, we do not give raw data to the management. What do? Whenever we have any data, we make analysis. So if we have, let's just say, for example, monthly revenue figures, then what are we going to do? We are not going to give just like that. We are going to take it, we are going to subcategorize it. For example, we can break the monthly revenue figures product wise, location wise, gender wise, isn't it? That's how we can modify the data. And then the third is financial analysis and interpretation. Yes, we all know managers, they do not have, knowledge like CA or CFA, right? So we are CA, we are CFA, yeah, we are financial analysts. So we have to do the analysis and we have to give them the report. We will do ratio analysis, so many different tools and techniques that we have discussed. Yeah, by way of that, we will do analysis and we'll interpret it, and then we will write the report and give it to the management, isn't it? Yes. So see, communication means that thing only. Yeah, there are 3 different levels of management. Wherever the information is needed, we will provide that, isn't it? So that proper communication is done. And then the fifth is use of non-monetary information. Yes, understand, in financial accounting we mostly talk about monetary terms, but here it's not like that. In management accounting, we are not just seeing the numbers, we are also looking at the qualitative information. Okay, not just